Hi everyone, I'm Ollie, a qualified financial advisor and a financial coach. So here at MME Money Hub, our mission is simple: to help everyday people feel more confident, more informed, and more in control of their finances. Today we're talking about something I get asked all the time through my day. Should I overpay my mortgage? For some people, overpaying their mortgage can save tens of thousands of pounds and help them become mortgage free years earlier. For others, it might not actually be the best use of their money. So let's break it down. Why do people overpay their mortgage? Most people overpay their mortgage for two reasons. One, they want to become mortgage free sooner. And two, they want to pay less interest to the bank. And both are perfectly valid reasons. Remember, a mortgage is often the biggest debt you'll ever have. And it usually lasts for 25, 30, 35 years. That means even small changes can have a surprisingly huge impact over time. So let's just have a look at an example. So suppose you have a £200,000 mortgage. Let's say your interest rate is 5% and it's over a 25-year period. Pretty standard stuff. Your standard monthly payment would be around about £1,200 per month, give or take. Now imagine you decide to overpay by just £100 per month. So instead of paying 1,200, you're paying 1,300. It doesn't sound like a huge amount. Maybe a few takeaways each month, a couple of subscriptions or one or two impulse buys. But look at what happens over time. So according to HSBC, without overpayments, mortgage term of 25 years, your total interest paid will be around about £151,000 over that 25-year period. That's interest only. That's not paying down the actual debt. That's just the interest. Now, let's say with the £100 per month that you overpay, the mortgage will be paid off around about 3 years earlier. So instead of 25 years, it gets paid off in 22 years. And the interest that you save will be around about £24,000. So you will pay £24,000 less interest and your mortgage finish probably around about 3 years earlier. Now, whenever I share an example like this, someone usually points out, "Oh, Ollie, hang on a minute, £100 per month, roughly for 22 years, that's 26,400. So I've paid 26,400 and only saved £24,000. So how is that a good deal?" It's a really good question. And the important thing to understand is this. So the £26,400, it isn't a cost. The money, it's not money that just disappears. It's mortgage debt that you would have paid back eventually anyway. The difference is that you've paid that debt back earlier. By reducing the mortgage balance sooner, the bank has less opportunity to charge you interest on it over the next 20 plus years. So what you've actually achieved is you still repay the same mortgage amount, you become mortgage free 3 years earlier, and you avoid paying approximately £24,000 of interest to the lender. So another way of looking at this is if your mortgage rate is 5%, every pound you overpay is effectively saving you 5% mortgage interest that would have otherwise been charged to you. Which is why many people see mortgage overpayments as a guaranteed risk-free return equivalent to their mortgage rate. So if your mortgage rate is 5% and you're overpaying, then that's effectively you're saving 5%. Let's have a talk about the emotional benefit. So now let's move away from the numbers for a second. So one of the biggest reasons people overpay, it isn't financial, it's emotional. Imagine waking up one day and knowing your home is completely yours. No mortgage, no lender, no monthly commitment hanging over you. For many people, that feeling of security and freedom is worth far more than any spreadsheet calculation. And that's completely fine. Not every financial decision has to be about maximizing returns. Peace of mind has huge value too. But should everyone overpay? This is where the conversation gets interesting. So before making mortgage overpayments, I'd encourage you to think about a few other areas first. So number one, do you have an emergency fund? If your boiler breaks tomorrow, if your car fails its MOT, or suddenly you lose your income, could you cope financially? Because once money goes into your mortgage, it can be very difficult to get it back out again. That's why I generally want to see at least 3 to 6 months worth of essential expenses sitting in an emergency fund, okay, before you become aggressive and overpay on the mortgage. Okay, you need to have that emergency fund in place first. Okay, number 2, do you have expensive debt? Okay, if you're paying 25% interest on a credit card or 30% interest on a store card, and your mortgage is 5%, the maths is fairly straightforward here. Paying off expensive debt should usually come before overpaying your mortgage. Every pound used to clear high interest debt is likely to have a much bigger impact on your finances. Okay, so check to see if you have any other high interest debt before overpaying your mortgage. Okay, number 3, are you investing in your future? Okay, this is where things become a bit more personal. Okay, so if you're employed and paying into a workplace pension, like most people are, your employer may also be contributing. Are you taking advantage of that? And on top of that, the government provides tax relief. So in some cases, every £80 you put into a pension, that becomes £100 immediately from day one. Okay, higher rate taxpayers, so if you're paying 40% income tax, then the benefit is even more because it's 40%. So before overpaying your mortgage, it's worth asking, could this money potentially work harder inside my pension, or perhaps inside an ISA invested for the long term? Now, investing obviously comes with risk and nothing is guaranteed, but it's important. It's an important comparison to make. Okay, am I going to get more out of putting my money into a pension, or should I overpay my mortgage? Okay, number 4, could your family cope financially without you? If you have children, a partner, a wife, husband, or anyone who depends on your income, protection planning is incredibly important. So I'm talking life insurance, income protection, critical illness cover. These are often overlooked because they're not particularly exciting. Let's be honest. It's not exciting speaking about insurance, but they can be some of the most important financial products you'll ever own. Okay, before focusing on becoming mortgage free in 20 years, make sure your family would be okay if something happened to you 3 months' time. Let's think about the now instead of the future. One thing to check for is early repayment charges. Okay, so before making large overpayments into your mortgage, just check your mortgage terms and conditions. If you're unsure, reach out to me. I'm more than happy just to cast an eye over and give you some feedback on that. So many lenders allow overpayments of up to 10% per annum of the outstanding balance, okay, each year without penalties. But every lender is different. So going over those limits could trigger charges to you, okay, which could reduce the benefit of doing it in the first place. So always check for early repayment charges before doing that. So just to conclude on this video, there's been lots of information being chucked at you here. The question of should you overpay your mortgage, without sounding like a politician, maybe. So if you have an emergency fund, if you don't have expensive debt, if you're already saving for retirement in a pension and other investments, and if your family is financially protected through insurance products, then overpaying your mortgage can be a fantastic way to save interest, to reduce your risk, and become mortgage free sooner. But just don't assume that it's automatically the best use of your money. Okay, the best financial decisions are rarely made by looking at just one thing in isolation. Okay, they come from looking at your overall financial picture, because your mortgage is just one piece of your puzzle. Look, if you like this, I'd love to hear your thoughts. Are you overpaying on your mortgage? Are you thinking about it? What are your considerations? What are your questions? And if you want, if you like more practical financial education, live coaching sessions, real life money conversations, then come and join us inside the MME Money Hub. I'll share the link somewhere. But yeah, thanks for watching. I hope it was useful, and I look forward to doing another video.